When efficiency gains aren't enough to keep production agriculture profitable. That's the discussion in this episode of the Business of Agriculture. Hey, Damian Mason here with a question before we hop into this episode of the Business of Agriculture. If you farm for a living, you employ a lot of amazing technology, from your inputs that you put into the soil to the tractor that you sit in, your combine, and the amazing data that it harvests. But has your soil analytics kept up technologically with everything else in your farming operation? I would venture to say that no, it is not. Sure, you check for your nitrogen, your phosphorus, your potassium, your micronutrients as well. But what about disease pressure? Do you know what diseases and what pests you're going to face next year? No, you don't. But you can now figure that out with Pattern Ag's predictive analytics. Think about it. They can tell you now with testing what the likelihood of facing nasty diseases, things like cyst nematode or sudden death syndrome, what the likelihood of you having this in your field, then you know how to prepare, how to treat, and where to invest your money. It's using technology to make you bigger yields and therefore make you bigger money. Go to www.pattern.ag to learn more. They are pioneering the way in predictive agronomy. Hey there, welcome to another fantastic episode of the Business of Agriculture. Got a great one for you today because I got a great guest. He's a recurring guest. He's my business partner on the Business of Ag Success Group. His name is Todd Thurman. You know him. He runs a company called Swine Insights. Global, China, Russia. He lived in Russia, for God's sakes. Now he lives somewhere that's just about the same. He lives in Texas. Anyway, he's a sharp dude. He writes a column. The blog is called...
There's two, actually. There's the Swine Insights blog for pork-related stuff, and then the Ag Futurist blog.
The Ag Futurist blog is
the stuff we're talking about today.
The Ag Futurist blog, and that's why we have him here today. What we're talking about is when efficiency gains aren't enough to make production agriculture profitable because ... efficiency gains don't change demand. And this is something that I've been intrigued by. And I've been saying I'm going to do more about this. In other words, this is probably not the only time you're going to hear this discussion, but let's face it here. You listen to the Business of Agriculture because you're a business-minded agricultural professional, right? What we have historically done, and Todd's going to give you numbers and examples, and so can I. What we've historically done from going back to the 1920s, 1930s, we got more efficient. We got more productive, and we got more efficient. Using hybridization, mechanization, innovation, automation, all those Asians I talk about in my speeches, we got more efficient. We are able to produce copious amounts of food with 1.9 million farms that used to take 6.5 million farms because of efficiency. Here's the thing. Efficiency is great, fantastic, wonderful. We use less natural resources. You know what efficiency does not do? Efficiency does not change demand curves. Efficiency does not create more mouths to feed. Efficiency does not create more consumption, period. That's going to be a problem because if you've listened to anything that Todd and I put out before, we're grossly oversupplied on almost all major commodities. We're sitting here at break even to below cost of production commodities in many cases, and we keep thinking, well, let's get more efficient. Efficiency has its limitations because it can't change demand. That's the setup. Todd.
Yeah, and this is not about bashing efficiency or whatever. Efficiency is important. It has been important. It will continue to be important. But I think the title of the podcast is really accurate in that it's important. We've got to keep focusing on it. Nobody's suggesting that we try to pull away from that because it's important from an environmental perspective. It's important from an economic perspective, but it's just not enough. And I think as we take a step back, and a lot of what you and I talk about out there is really some of these underlying fundamentals that have, for all of our careers have become kind of part of the background. We didn't even think about it. We just kind of assume that this is going to continue. And one of those is population growth. So as we think about population growth and economic growth that may or may not be directly associated with that population growth, have kind of provided that undergirding for where the demand's going. And so it's kind of this constant current moving in a positive direction in demand. And as we know, and as we've talked about a little bit on this podcast in the past, that pace is slowing down and will eventually, and probably sooner than a lot of people think, reverse itself. And so those underlying assumptions that we've made around demand are not going to be true for all that much longer. And they're already slowing down. So, you've got population growth at its peak was around 2%, a little more than 2% every year. Now we're less than 1% globally. We're at about 0.87%, and that's going to continue to get slower and slower until it eventually starts to reverse. So those underlying assumptions that we always kind of make, sometimes without even thinking about it, are not going to be true for much longer.
So if you've not tuned into our shows before, Todd's been a guest on here like a half dozen times, and at least twice we've discussed the reality of the population situation. And if you doubt us, go find those episodes and you can start digging into it. The United Nations is still clinging to their prediction that we might hit 9.5 billion people or whatever. We're at about 8 billion now, if you believe the current United Nations numbers, which I don't. So the point is, our population growth rate is declining precipitously. You might have just heard him say we were over 2% population growth annually on the globe going back to the 1960s, 70s, 80s. When Paul Ehrlich wrote his book, Population Bomb, that we're all going to die of overpopulation. And now we're sub 1%. Todd just pointed out somewhere in the 0.8%. Again, if you believe the United Nations. That might not sound like that big of a deal going from, say, 2.2 to 0.8. That essentially means we've dropped by 2/3 of our rate of growth. Imagine your 401k drops its appreciation or its investment gains by 2/3 of what it was last year. It starts changing things remarkably. All of a sudden, your account don't look like it's growing very quickly. That's what's happening with the population. So if you figure, we always had this thing in the United States and in all of global agriculture: make more food, make more product. And if you do so more efficiently, you're going to be okay. Your head will stay above water because you've always got this thing called population growth and increased consumption. Generally, the globe's economy has improved. As global economies improve, nations' economies improve, the citizens eat better. So you get people eating better and you have more people. So more people eating better, efficiency was enough to keep you in the game. It's Todd and mine assertion that efficiency gains, while as wonderful as they are, will not be enough to keep you profitable, maybe from here on.
Yeah, and so much of what we talk about is, really we're trying to provide a supply solution to what is ultimately a demand problem.
I was just saying, wait, say that again, because that is something that everybody thinks economics is complex. Efficiencies are good, and we do it every day, right? I want to make more with less. But efficiency gains are, say that again.
Yeah, so efficiency gains are a supply solution, right? It's a way to improve supply. And really, if you break it down and make it really, really simple, and it really is that simple, there's really two ways to improve your productivity, to produce more. And that is to increase your volume. So if you're in my business on the pork industry, you put in more sows, you put in, build more farms. Obviously, that's going to do the trick, and then you get more efficient. So you produce more with less, or more with the same amount of resources. And so those are really the two ways you can improve. That you can increase the volume of whatever the product that you're producing. And on the demand side, again, like I already mentioned, it's really simple. It's how many mouths do you have to feed, and then how much consumption on a per capita basis are those individuals consuming. And so when you kind of break it down on the supply side and the demand side, it's really, quite simple. And we're just very accustomed to working on the supply side because we just always assumed that demand was going to be there. And frankly, for the last couple of 100 years, we've been right, but those, like we've talked about, those trends are changing, and our reaction, our almost intuition at this point is to try to solve that with supply problems, with supply solutions. And so you really have what is a developing demand problem, and our solutions are supply driven. And so obviously, if you're, when you say it like that, it sounds ridiculous, but it really is that simple. But those assumptions that we've made are really, really powerful. And they've become part of our systems. They've become part of our narrative. They really become, easy assumptions to make because they've been true all of our careers. But that's changing pretty quickly. And there's only so much you can do on the supply side to adjust for a demand problem.
I want to give an illustration to that very point. And before I do, I want to tell my listeners about Truterra. Truterra is a business partner here with the Business of Agriculture, and we really appreciate them. They are focused on supporting farmers at every stage of the sustainability journey to help plan, make, and maintain regenerative management practices to improve agronomic as well as economic returns. You know what? You've got right now a really tough situation on production agriculture where you're going to be probably around break even. What if you can diversify your revenue by getting a sustainability program in place? And what if that sustainability program is as simple as you reduce tillage, you put in some cover crops, do some of these things? These kind of programs are going to be coming. They're going to become more and more prevalent. I think you should get ahead of it. If you are in the business of agriculture, you should really look at this kind of a program to diversify your revenue per acre. And you know what? You can do that with Truterra. Go to TruterraAg.com, TruterraAg.com, part of the Land O'Lakes company. Been around for more than 100 years, Land O'Lakes. You know you can trust them. What you just said is so dead on. It's just like you and I, when we talk about the population, Todd, we talk about a lot of these well-held convictions. We're a commodity business in general. Although we applaud from everything from organic regenified turkey, like I had those people on this show, to different value-added propositions. In commodity production, low-cost producer wins. That's always been a statement. I've heard farmers say that again and again. I'm sure the people at Alcoa and making aluminum think that, or whoever is in the business of any commodity. Low-cost producer wins, but is low-cost producer even profitable? Because at some point, it comes down to there's just not enough demand. And I know this is hard for our people to grasp, and it's not hard for them to grasp. They're not stupid. It's just it's different because we've never thought this way. We've never thought we're going to have the supply problem handled, and we're going to not need any more stuff. And I think that's why it's a hard new way of thinking. That efficiency was just enough to keep you profitable. Not anymore.
Yeah. And I think that's a lot of what I talk about in my talks on this topic is really that it's been true for so long, as long as any of us in the room really can remember, that demand has been growing. And you go back, you mentioned Paul Ehrlich, and you go all the way back to Malthus, and they've been saying, look, we're going to have an inability to meet this demand, and so that was the disaster. And in reality, we have the opposite problem. Really, is the population bomb is not really a problem. What we're beginning to realize is the population bust is going to be a real challenge that we've not really dealt with, and so we really addressed that supply side throughout this dramatic growth. And I think a lot of this has to do also with some, really well-deserved pride around our accomplishment. You look at that green revolution or whatever you want to call it, where we had an explosion in the population by anybody's definition, and everybody thought everybody was going to starve to death. And we had arguably the biggest achievement in human history by finding a way to meet that demand. And so there's a certain amount of pride associated with that, and that's one of the reasons why that narrative has gotten to be so strong in our industry. But the reality is the environment is changing, and we're proud of that. We should be proud of that. I know I'm proud of my little part. I'm sure you are too. But the reality is the environment's changing, and we really need to make some adjustments. And these are such fundamental adjustments that I tell people all the time, look, the world's not ending tomorrow. These are slow moving things, but they're such fundamental, such foundational things that we really need to start talking about them now, because these changes are not going to be easy.
You just talked about what happened going really the last 900 years, call it the 20s, really the 1930s until today. We didn't really have surpluses until then. And it made me a chance to push my book here, Food Fear. 5 years old now next month, came out December of 19. Where I talk about the past, present, future of agriculture. And I call it in one of my chapters, the amazing accomplishment. I say, the amazing accomplishment is we not only thought we were going to starve, we had been starving. We had been malnourished. And in a very short period of time, essentially from about the 1930s until about the 80s, 50 years, the amazing accomplishment was we started creating surpluses so much so that, my God, farms were going under because the same thing we had then. So efficiency gains, Todd, we've been remarkable. You're in the swine consulting business. You're talking what? 12 weaned piglets per sow, probably now 3 times a year. I mean, I'm guessing you're the expert here. And what would it have been in the 1960s? Half that?
A fraction of that, really. And, I mean, you go back just to when I started in the industry 25 years ago, and we were giving people awards for doing 19 pigs per sow per year. And now, if you're not 30 or close to it, you're having trouble being competitive. So, it's really remarkable how we've improved efficiency. But, those incremental gains are harder and harder to get. I tell my clients all the time, going from 23 to 25 PSY is one thing. Going from 25 to 27 is a lot harder, right? Yeah. And so the better you get, the more challenging those additional gains are. And so we need to keep driving on that, but we need to understand that as we get better and better, those incremental gains become more and more difficult to capture. And so again, we need to keep pushing. Obviously, we need to keep moving in that direction, but it's not going to be enough. Even if we could make the same kind of gains we made in the last 25 years in the next 25 years, when your problem really is not an insufficient amount of demand, that's not
an insufficient amount of supply. You must misspoke.
Right.
Your problem isn't an insufficient amount of supply. It's that demand is capped. It's just pretty much stagnated. So that thing you just said before we hit record, I mean, the person listening to this is, of course, they like it when you and I get out here and talk about things that are a little bit more mind broadening on like, crap, I've never had anybody think about this. So I kind of said before we hit record, imagine a kid that's got decent athletic ability, has never actually been properly trained and never had proper weight training and physical trainers, and then also never had proper diet. You can take that kid and in 6 months' time be like, holy shit, look at this kid. He's like developed a chest, got great big shoulders now. His speed went from a 4.8 40 to 4.2 because we just taught him how to run. Now imagine the other side of that is you go into an NFL locker room with a person that's essentially been a professional athlete from the time they got out of a big high school program and went to Ohio State and then went to play for the whoever it should be, the Detroit Lions, whatever. They are already on a great diet. They're already with the best physical trainers in the country. You're not going to get huge gains from them. That is the athletic comparative to what Todd just illustrated. To go from 19 piglets weaned per sow per year to 30, that's a hell of a big lift. We're not probably going to go from 30 to 41, meaning grabbing another 11. Actually, from a percentage basis, to do the same percentage, you'd have to go from 30 to like 45 or 6, right? To get that same percentage of gain in the next 25 years. It's harder to do. It's harder to take. Once you've made the big leap, efficiency gains are harder. And I think that's what you and I are both driving at. I don't think that they will ever be enough. In other words, I don't think there's enough efficiency gains to be accomplished to make up for the problem of oversupply and stagnating demand.
Right. Yeah. And I think that's really what it amounts to. And as long as demand continues to increase at 1 or 1.5 or 2% a year, then that efficiency can help you keep up. It can help you continue to produce enough to meet that demand without having to have unrealistic levels of volume that you're dealing with. And so, but that's really what we've come into here is we've got a situation where that incremental gain is going to be harder to capture. And even if we were able to capture it, that's really ultimately not the problem. And again, you've got to keep driving there because you've got to keep working on, and there's always opportunity. And we say we've made, these huge gains and then we keep making gains and that's great. But that's not going to solve our problem. We need to keep doing that. But even if we're wildly successful, we're still going to have an issue here that we have to figure out. And it's really around the demand side.
What do you think? I want to throw this out here. it could be your career and mine, say roughly 25, 30 years. It could be you and I being around agriculture for, say, 50 years, whatever. Let's just say the last 50 years. I don't have the exact number, but I can get pretty damn close. The number, the average margin, meaning the average actual return for production agriculture in the United States of America. And I can go across all things from livestock to milk to commodity, to grains to whatever. I've got a number in my head, and I want you to get a number in your head of what you think that number is. And then I'll tell you where I'm going with this. But before I do that, I got to go and do a quick break for Redox. By the way, dear listener, you hear what I'm saying? Get a number in your head. What do you think the actual margin, profit margins are, or return on capital have been in the last 50 years? I got a rough idea. Get it in your head. If you're a Midwest corn, soybean, or wheat grower, I want you to tune in right now, because the evolution of agronomic strategy from Redox Bionutrients is a new way of thinking of getting more with less. We're talking about efficiency right here through ultra-efficient plant nutrition and superior biostimulants. Redox is a family-owned and operated business out of Burley, Idaho, with 30 years of success throughout the United States and abroad. The Pathway program they have a Pathway program. It combines flagship products, Mainstay SI and Banks, with breakthrough nitrogen optimization through their new RDXN technology. If you want to learn more, including detailed information, and get an agronomic contact who can actually call you and help you out with your farming operation, go to redoxgrows.com/Midwest. Redox, REDOX, redoxgrows.com/Midwest. What's your guess on about the return? Because you and I talk about the returns are so paltry, most investors would never even want to be in this endeavor, not to mention doing the work of production ag.
Yeah, it gets a little complicated because you wonder, are you looking at just the profitability on the production piece, or are you looking at for example, on the crop side, the appreciation of land and other assets? It's a little bit different, but I think on the production side, you're looking at maybe, at best case scenario, upper single digits in terms of profit margins. Okay,
so I was going to say upper single digits, maybe 8 to 9%. And this is why I'm going with this efficiency thing. Almost everyone that's listening, that's been around this game long enough, even if you're 25 years old, you remember being out there on the farm when you were 15 and how much more efficient you are now. Let's say you gain efficiencies of a few percent per year. That's pretty much reasonable, right? You get 3% better each year on utilization of fertility, 3% better on, we use less natural resources, we use less iodine on the cows because and you also then get that 1 to 2% gain on production. You make more pigs per sow. You get more gain per steer in the feedlot in Kansas with the same amount of feed. What you and I are just saying here is efficiency gains alone might be, if it was a 2 to 3% gain just on efficiency, that might have been responsible for 1/3 of your margin. And then throw in more consumption globally because of a growing population or people eating a little better. There's another couple. More than half of the margin of what we produce in production agriculture probably came down to a little bit of gain of consumption and a bigger gain in efficiency. You and I are both kind of proposing that we're about done with that.
Yeah, and as you keep driving that down and margins you get more consolidated and margin keeps getting smaller and smaller, the opportunity there keeps getting smaller and smaller as well. And you mentioned it earlier, the low cost producer wins. I was told that in my first week in the pork industry. I was told that's basically the game. The lowest cost producer wins, and that was true for my entire career. Still is true to a certain degree, but it's becoming less true. And eventually it's going to be not true. You're going to have to figure out how to address the demand side, or it's a matter of a managed decline. I mean, there's no two ways around it. And a lot of this population stuff and these things we talked about, there's a lot of people that disagree on kind of when this is going to happen and exactly how it's going to play out. But really nobody disagrees that this is happening, right? We're really just having an argument about how quickly is it going to happen, and how exactly is it going to play out. Everybody, including the UN, agrees that this is the direction that we're heading. And so, this is a discussion that's going to happen at some point, no matter what. So my argument is, let's have it now. And if I'm wrong and we have extra time, then great. And if we don't, then we're doing as best we can.
You say that, Mr. Thurman. I just had a conversation this morning with an ag person that told me that we were going to be at 9.8 to 10 billion mouths to feed in 26 years from now in the year 20. Remember, you always got to grab a number that has a nice ring to it. Y2K 2050, the magical stuff. And if you listen to the predictors, we're going to keep gaining population until 2050. And then it's like, because the population knows that's the mid part of the century where it can start changing. Bullshit. Anyway, bigger thing here is, again, like you said, we're not in any way haranguing efficiency. It's just that it's no longer enough. And so the person listening is like, all right, you're saying to stop trying to get more efficient? No, absolutely. Keep dialing it in. And computerization, artificial intelligence is going to help us. So let's go with how we'll get more efficient. And then I want your thoughts on what we need to do in addition to efficiency gains. I just threw out artificial intelligence. And I'm not an early adopter, but I can already see where it will give us efficiency gains, even, certainly on things like document creation and all that. But even in production agriculture, I see those kinds of technologies making us more efficient. I assume you do too.
Yeah, absolutely. And it's sort of hard to underestimate the potential of a technology like that. I mean, some of the stuff that we're already seeing on the biology side, in terms of kind of accelerating the discovery of new molecules and stuff like that, there's so much potential there that's hard to wrap your mind around. And so we very well could be underestimating our ability to wring even more efficiency out of the system. I was just talking to a guy a couple of weeks ago, and I said, I look back, I'm at that stage, I've been in the industry 25 years, and we're kind of reflecting. And, I look back on my career, and I think 25 years ago, some stuff we wouldn't even recognize today. Mm-hmm. And some stuff is pretty much the same, right? Mm-hmm. So there's definitely opportunity, and I'm very bullish on some of those technologies to be able to help kind of have that come to fruition. But, really, as we start thinking about, you mentioned the 2% number, that's pretty much where we're at in the pork industry. We're producing 1.5 to 2% more pigs every year, or more pork every year, with the same number of sows, right? And population growth is not growing that fast. And so, as this, thing starts to play out, that additional growth is, becomes a bit of a liability in a way. And so we have to start thinking about how do we scale back, or how do we increase consumption? And I think, the other thing that we try to mention in a lot of these podcasts when we talk about the population deal, it's not just the population size, it's the makeup of that population. Mm. And that population is aging quite rapidly. And that's a real challenge, because older people eat differently than younger people. And so, as we think about consumption, agriculture is unique. And, we talk about agriculture is probably not unique as unique as we like to think it is, but it is unique in one way, or somewhat unique in one way. And that is that there's a sort of a biological limit to consumption, right? There's really no, limit necessarily to the amount of TVs you can consume, or cars that you can consume, or really, anything else. But
well, the limit, of course,
there's a limit to the amount of food you can consume.
The limit, of course, would be space or free finances, right? I mean, I could have 100 TVs. I have a barn out here with lots of space. I could put 100 TVs in it. How the hell I would use them, or how I would even have to get the electrician to come out and, run me new some circuits. But yes, there's no limit to that. There's a limit to how much I can eat. At some point, my God, I'm laying there with, I'm gorged. So yeah, that's one uniqueness. And I think we should go back to that efficiency thing, because the person that might quibble with you and I and say, no, we can still wring a lot more out of this thing on efficiency. Sure. Yes. We both, I was a DuPont sales intern in 1991, and I can tell you that the way we utilize chemistry, these see and spray sprayers, for God's sakes, that they're that John Deere has, where it sees a weed and sprays it. So you're talking about spraying only 1/10 as much instead of 43,560 square feet getting sprayed. You're only spraying it where it needs to. No disagreement from Todd or I that there's a bunch of things we'll get even more efficient about. But to Todd's point, those are incremental gains in efficiency, not monumental gains in efficiency. When you went from, 1950s of 20 pounds of milk produced per cow, or I'm not sure it was even that per year or per day, to today, 90 pounds of milk produced per cow on a modern dairy farm. Those are monumental gains. We don't go from 90 pounds of milk per cow per day, same ration, lesser ration, to 200 in the next 40 years. It's almost physiologically impossible.
Yeah, and ultimately, at the end of the day, it's to what end?
Yeah. So
we would run the risk of getting.
We have so damn much milk.
We're getting really good at producing something that nobody wants to, that nobody wants to consume or needs to consume. Just much more of it than what people can consume. So yeah. So even if we're way underestimating this efficiency, it's at the end of the day, you're producing a product that is in surplus. And, and then the solutions to this, the obvious solutions are not going to be ones that are going to get people in the ag industry excited. I mean, you've mentioned quotas before, and you've asked me on several occasions, is that where we're headed with this? And my answer, I think, has always been, if we don't come up with a better answer, then yeah, that's where we're headed. And I don't think that's a good answer. I don't think that's a good solution. But, if we don't come up with something better, then that's certainly where we're headed. And that's really what we're trying to say is let's have a robust discussion about what this is going to look like in the future and start thinking through some different strategies that would be a lot more friendly from a production agriculture perspective.
Okay, so when efficiency gains, and again, I think I reiterate it, you can go at it from any side. We both agree that there's efficiencies to be harnessed. Yes, absolutely. Again, just talking about crop inputs. Better absorption of the crop inputs, less ounces per acre because it's being so strategically and meticulously and accurately applied. Absolutely. Diesel fuel. We use a boatload of diesel fuel. There's efficiencies to be gained there. That keeps taking expense out of the pie. But like you said, generally efficiency doesn't just mean using less resources. It means making more with less resources. And you said, to what end? And I'm sure you made some people mad when I said making all this milk. You said you're making something that nobody wants. You didn't mean nobody wants. It means we're already saturated. We've already got as much of the stuff as we can consume.
And we need to look at how we, can drive consumption up as well. I mean, that's certainly something we need to work on and continue to work on. I know I've harped on this population dynamics and how the age is changing. We need a lot more research to better understand what's going on with these older consumers and, how they're, how we can meet their needs, meet their needs. I mean, we think about on the meat side, protein, muscle loss in older folks is a huge challenge. And I think a big part of that is they don't get enough protein, So how can we figure out ways to, help them increase their protein consumption at those older ages? I mean, those are things we really need to be working on. So as we sit here and talk about, okay, well, what are the solutions? Well, it's about, increasing demand where you can on a per capita basis, because we know that the number of mouths to feed is going to begin declining at some point in the future, whether that's 20 years from now or 30 or 40 years from now. That's the debate, but it's going to happen, and it's already happening in some real key markets around the world. And I think that's the other key point to make, is that this doesn't just tip over when we have global population begin to move the other direction. It's a process, and we're already well into that process. I mean, about a third of the population lives in a country now that's already in decline. And so when we think about this from a global, standpoint, we're already beginning to move down that path. And so increasing that per capita consumption, I think, is an important piece. But then we have to start thinking about how do we increase the value of the stuff that they are consuming.
That's okay. I was going to go with two things. I was going to go with, the first one you already mentioned. You and I recorded an episode, and we recorded a sequel to it called Oversupplied. Is the globe oversupplied on everything agriculture produces? And then we came back the next week and said, what if we were wrong and we're not oversupplied? And here's why. Well, one of the things that we said in the oversupplied was Is the answer going to be a quota system, a supply management system? And if you're not familiar with this, dear listener and viewer, look to Canada. They do it on dairy, and they do it with all things with feathers, poultry and eggs. It's a supply management system. It fixes supply. It's roughly in line, almost exactly in line with what demand is, and therefore you could produce more milk, but you ain't gonna be able to sell it because you're on a quota system, and that way it keeps your price up. It gives you an expectation of what the return is going to be, and it gives you a profit. What it also does is it creates some inefficiencies because, just like everything that seeks to do a price floor or price ceiling to circumvent true market forces, it creates some inefficiencies. Rent controls or minimum wage would be other examples of that, where it seeks to circumvent the true forces of supply and demand. That's one answer. The other answer is, you just said about the country, the world. So by the way, about the efficiency gains in the quota system, you said you'd like to not see a quota system. What's your prediction? You told me in the other one, I put a supply management system at almost 50% chance of happening in the next decade in the United States.
Yeah, I wouldn't argue with that. And the main reason I wouldn't argue with that is because there's not been a viable alternative proposed. I mean, the same thing on the broader economic issues. You know, they've talked about a UBI or universal basic income, and what's the chances that's going to happen if we have job loss as a result of some of these new technologies? Well, that's the same answer there. We don't come up with a better option. If we don't come up with a free market solution to that problem, then the chances are virtually 100%. We won't have any other. There won't be any other option from a policy perspective to take. And so that's really ultimately one of the main things that I'm trying to advocate for is let's try to come up with some solutions that are, capitalist friendly, that are free market friendly, that we can provide hopefully a more palatable alternative that will certainly be more palatable to the production side, but also to the consumer side, because I really think that's important.
Okay. We'll throw another one out there. We know that in places like the United States in particular, but even Mexico, somewhat now in China, a little bit in Canada, obesity is one of our biggest health concerns. Not only about, oh boy, the people are starving. They're not only not starving, they're obese. There are probably, is half of the world's population able to eat more? When we talk about, if we just want to keep on cranking out stuff, we still can sell more food per individual where they're not obese, but also call it India, for example. They got a rising economy and a populace that's probably capable of eating another few hundred calories per day. Throw 300 or 500 calories per day over 1.3 billion Asian Indians. You sold a hell of a lot of food. But there's a bunch of the people that could eat more that can't afford to do so. So that's the quandary.
Yeah, and and all these conversations end up coming back to the same spot, really. And from a population perspective, it's really how much economic development are we going to be able to manage in Africa, and is Africa going to be able to come through with the kind of growth that we saw in Europe a couple hundred years ago, and in Asia over the last 30 to 50 years? Are we going to be able to see a similar type of thing there? I hope so, and I'm actually quite fairly bullish on that compared to a lot of other analysts. But we have to understand that that's coming. If that materializes, even if that materializes, it's going to be coming. It's going to be offset to some degree by reductions in other places where we're seeing, because of population aging and because of population decline, we're going to see in Europe and East Asia at the same time that hopefully Africa is really exploding and taking advantage of that potential. That's going to be offset to some degree by declines in Europe and East Asia, and then ultimately in other parts of it.
Well, and also there's the economic part of it. I mean, it's neat to say, we'll just keep getting more efficient, and maybe we can still sell $9.60 soybeans and make money on them if we keep getting more efficient. And then, of course, you say to who? And you say, well, the globe's oversupplied on soybeans. And then you say, And also the people that could eat a few more soybean derived products, which I guess would mean soybeans mostly go to livestock or even some sort of a soy-based protein product, they can't afford it. So you can be as efficient as you want, but if the remaining consumers that are out there that need more food can't pay for it, you're going to give it away? Then your efficiency, then the 2% efficiency gains you just accomplished are meaningless.
Well, and then ultimately it just drives down profit margins even further until it gets to the point where you can't afford to produce it at all. So, yeah, I mean, and the other big macro question that we don't really have a good answer to is, can we continue to grow economies at roughly the same rate that we've been growing economies without that population growth as an undercurrent? And I certainly don't have the answer to that question. I don't think anybody has the answer to that question. That's not even my field. But that's very much a question, an open question. And I think probably the answer is yes, we can probably continue to grow economies, but probably not at the same pace that we have in the past. And so again, that's one of those, going to be fewer people. Ultimately, there's going to be fewer people consuming. And then the big question then becomes, how much are they consuming? And in the traditional model. And then if that's not keeping up, then the only other place we have to go is to increase quality in a way that people are willing to pay a greater premium for that, right, so that we can keep our profits up without having to increase them. And so that's really where we need to be focusing long term. That's what we've talked about, making that transition, and that's essentially what we're talking about. But our systems aren't designed for that. Our systems aren't designed for quality. We've talked about on the pork side, what do we need to do to increase meat quality? Well, none of our systems are oriented that way. No. We have to change the incentive structure in order to do that. And those are hard things to change, even if you want to, even if the need is obvious. Those things don't turn around overnight. So, and every different commodity has their opportunities.
Do you think, because again, there's still people that are listening to this saying, well, we'll just keep getting more efficient, it'll work, that they really believe that, or it's just because they want to believe that? Because that's kind of what we've always told, and like you said, you heard it your first day in the business, and I've been here my whole life, low cost production, be efficient. There's a General Motors truck plant 25 miles from my farm, and they're pretty efficient at making trucks, even with the UAW contract that they got to pay 40% more now for. And you're like, well, what if they cranked out 5 times the number of trucks that they do right now? They still have cost in every one of those trucks, a little less, because with every incremental unit you get less economies of scale, cost per unit go down. But at some point, there's only so many trucks that can be bought, and that's where we've got to start looking at this. I see quota system. I also would say efficiency gains, yes. Where I think that some acres leave, I think some marginal acres will have to exit. I think some marginal hog producers will have to exit. I think maybe it's going to be a combination of all of those things. It's going to be a quota system, a push for a quota system. There's going to be maybe some government programs, and there's going to be some idling of the only problem is what usually gets idled is the least efficient stuff, which means you didn't really take a whole hell of a lot of supply out.
Yeah, it's essentially what we're seeing in the and I keep going back to the pork industry because I know it, but it's also a really good example right now of what's going on. And essentially, we've had a really hard time decreasing our production, right? Yeah. So we've taken sows out, but we just keep getting better and better, and we end up, we take sows out, but we keep producing more pork. We had a record bad year, the worst year, from a profitability standpoint in the history of at least the modern history of the swine industry in the U.S. And we produced more pork last year than we did the year before, and it's not because we didn't take sows out of the system. We did take sows out of the system, but we just keep getting better, efficiency wise. And so, we're not taking enough sows out of the system to actually adjust the volume of pork we're producing. And, and again, some of this sounds crazy. It just sounds because we've not experienced that. But if you're looking for an example, look what's going on in China right now. in terms of overcapacity, they've got a real problem. They're really good at producing, electric vehicles and solar panels and some of those things. But when there's not demand, then where are you going to go with that? And so many of these solutions, we talked about it on the ag side, but on the if you think about it from a macroeconomic perspective in China right now, that's the discussion that they're having. Is I keep talking about these challenges that they have from a demographic standpoint, and then everybody always pushes back and says, oh well, they're going to find they're going to do robotics and automation and all that kind of stuff. Well, that's great, that helps you produce stuff, but who's going to buy all this stuff?
Yeah,
right. Robots don't buy that stuff. They can solve that side of the equation, but the demand side of the equation is much harder to solve.
I made this point to some ag friends of mine that had a discussion, and they wanted to get into the next thing, whatever it was, producing something. And they were going on about it. And I said, all right, what do your numbers look like, do you think? Well, they look like good. And I said, but we can get, and it went right to, but we can get more efficient at making it. And I said, I'm not being mean. I just want to tell you what I know, what we've always done in ag is make more with less and assume that there's going to be a place to put it. And I've been preaching out to my audiences for more than a decade. We finally got to admit that making stuff isn't our challenge. I'm not saying it's not hard. I'm not saying that we don't work hard. I'm not applauding the technology. Like I said, we were talking about everything from the chemistry to the input to the biologicals now that like companies like Redox. It's amazing. But making stuff is not the challenge that it was. You brought up the China thing. China's factory floor and our fertile fields are kind of the same exact, or productive hog barns are kind of the same problem. China's economy right now has got a problem because for years they built up this thing of let's keep making a bunch of crap and figure out some place in the world that's going to buy it off of us. They're running out of people to buy the stuff. We're running out of stuff that needs bought. And again, they get better at making it. They're better at making kickballs and hula hoops and cheap bicycles and like you said, solar panels than they've ever been.
Yeah. And again, it just goes back to what I said, at the beginning is we keep coming up with supply solutions to demand problems. And that's because we've never really had demand problems. We've had cyclical demand problems, but we haven't had fundamental demand problems. And until now, it's almost been a non-issue. Really. It's just, it's just the only question was how do we produce enough to meet demand, and then how do we do that more efficiently so that we can, wring a profit margin out of that production. And now we're shifting into a very, very different environment, and we're trying to use old tools for a new problem. And all of our tools are designed for a completely different problem. And so we need new tools.
Our tools have always been make more with less. And by God, we've done it. So I said, I predict a few, and I could probably say 5 years. I said 10, but it could be 5 years. I said there's going to be a push. And I think it's because of the money. Honestly, I think that maybe the agricultural finance sector is going to say, we can't go through the 80s again. So either you got to come up with a bunch of government programs that keep subsidizing the hell out of ag, or you're going to have to set up a quota system so we keep margins up. And there will be a huge discussion. I see government programs idling acres on maybe a doubling of the CRP. It's right now 23 million acres. We could take out that much again and take some. Of course, it usually takes crappy acres off the shelf. I'm sorry, puts them on a shelf and they don't get produced. And then obviously a flight to quality where we're worried less about quantity and we start talking about nutrient value of food instead of just number 2 yellow corn. Maybe we've got some other factors in there about things like protein content, like they do in the wheat markets where you get paid a bonus over a certain amount or you get docked if it's below a certain amount. I could see some of that, which then it alters it from being just about efficiency gains to quality gains. And I could see some of that helping us out. Those are my 3 things or 4. Where are yours?
I think you're exactly right. I think it's really important though how those solutions are framed, right? And so if you said, okay, we're gonna add to the CRP program, if that's framed as a temporary, stopgap solution to kind of get us through this transition, but we really need to be thinking about, what are some more permanent solutions to this problem, then I'm perfectly okay with that, right? Mm-hmm. But if it's, this is the way we're going to do things, this is the long-term solution, I don't think that is the long-term solution. I don't think you can continue to just kick the can down the road that way. And so if some of these these interventions are, even if it's a quota, if you say, okay, look, we're going to institute this 5-year quota system, but we need to use the next 5 years to try to figure out a better solution, a more permanent, a more sustainable, a more free market friendly solution. I think that's where we need to push from a policy perspective to utilize those tools on a temporary basis and make sure that we're actually taking steps to come up with a more long-term, more sustainable solution.
By the way, Todd, all the ones I just mentioned are really U.S. specific. It's where you and I both, live. You work globally more than I do. A quota system, a CRP, a government new policy, or even a rewarding system that graded on quality. Those only work here. In other words, Brazil is gaining efficiencies every day on their production of crops and still willing to flood the global market with it, which means it still depresses commodity prices, which are already under pressure. So efficiency gains aren't just happening here. We lead. We like to think we lead the world in technology and agricultural production, and in many ways we do. But those efficiency gains are happening in Kazakhstan too.
Yeah, and it's a really good point that I think doesn't get mentioned very often and when I've been talking about China from a demand standpoint, they're improving their efficiency of production in every commodity that I can find, every an important commodity that I can find. They're getting better and better, and so as they're going to start seeing a real potential in a lot of these commodities to become self-sufficient in the coming years. And when I say the coming years, I'm talking 5 to 10 years, not 30 or 40 years. Yeah. And they're making real progress, and they've got, they're making progress kind of in an earlier phase of what you were talking about. So they're making they have bigger
incremental gains,
leaps,
bigger gains.
So, and they have the benefit of seeing how the rest of the developed world has done it, right? So it's just a matter of implementing it. I'm seeing that in my business in China. I'm seeing massive improvements in productivity. And so, that's another thing that, when you look at it globally, it's not like the rest of the world's just sitting on their laurels. Everybody else is making progress too, whether that's Brazil, who's arguably, taken over the leadership position in some of these commodities, or whether that's some of these more developing countries that are doing a better job of meeting their own demand. One of the things you look at with Africa, how much of that their own demand are they going to be able to produce themselves? Because a lot of times people think of Africa as, a big desert. It's not. There's a lot of productive capacity in Africa. So if they can get their act together from an economic perspective, they're also going to improve their productivity. And so, we can't just assume that whatever growth is there is they're going to have to come to us in Brazil and whoever the other exporters are, Canada and Europe.
They'll go through those efficiency gains that are monumental efficient. Because remember, your first efficiency gains are on a percentage basis bigger than the ones then you're making 60, 80 years down the road when it's like, we figured out a way to grab another bushel and a half or whatever. Yeah, your first ones are always usually your biggest ones. So anyway, that's where your prediction is. You didn't give me a prediction. I told you I gave you a prediction. Your prediction is we continue to get more efficient, but it's still not enough to keep agriculture profitable because we are attempting to fix a demand problem with a supply solution.
Yes. And so ultimately we have to either come up with a mechanism to manage a supply decline, or we have to come up with a way to continue to increase demand, either on a per capita basis or on a value basis, probably both, in order to offset that. And so, I think, again, the answer is all of the above, right? We need to do a little bit of all of those things. And that's probably the solution. But ultimately it comes down to that per capita demand in some of these developing markets, most notably Africa. And how do we make the shift from quantity to quality? And again, I'm not prescribing what that looks like. That it's going to look like different for every commodity and probably every country and all that kind of stuff. But that general shift has to happen. And for me, that has to happen for agriculture to continue to thrive, in the next, 70 or 80 years.
Yeah, and I think I should throw out to people that you and I both agree, it's kind of a from a political and or a national security issue. Neither Todd or I are advocating that we just stop producing. The United States of America should be a leader in agriculture, and we do lead in technology development that creates efficiency gains. Yes, and we should never, ever decide that we shouldn't do that, because you don't want to ever get to a situation where you're dependent on other countries that might be hostile to you to be developing those efficiency gains. So I think that's an important disclaimer right there, right?
And we have some, massive advantages. We've talked about it before. We're really good. We've got good people. We've got a good system. We've got a pretty stable political system. I know it's the day before the election. We're recording this, and I know it probably doesn't feel like that, but compared to most of the rest of the world, we've got a pretty stable political system. We've got a very strong economy, and we've got amazing natural resources. So, we're set up to win here. So this is a positive. This is a positive story. It's just a matter of navigating how we get from where we are now to where we need to be. But we've got a ton of advantages, and there's no reason not to be optimistic if you're in North American agriculture.
We'll leave it right there. Yeah, the problems that we have to manage of oversupply and being really damn good at production agriculture and getting to where our efficiency gains are more incremental versus monumental. That means we're already that professional athlete that we just talked about. All right. Remember my friends at Redox, they're a sponsor of the show. Go to redoxgrowth.com/Midwest. Also go to TruterraAg.com. And then, of course, my friends Pattern Ag. They are a leader in advanced soil analytics, predictive analytics, if you will. So you know what's going on out there in your soils. If you'd like to join the Business of Ag Success Group, and you could be with me and Todd every other Friday, twice a month, we get together on a Zoom call with industry experts, and we talk about things that are impacting this industry. We've got great guests. We got great dialogue. We got it's a network of ag professionals. It's only $99 a month. You know what? There's no subscription, so you can come and join us. And if you don't like it after a couple months, you can hop out. But we know you will like it because you're going to enjoy the smart conversation. His name's Todd Thurman. If you want to find him, he does speaking. He's got a blog that I like. He's got two, but there's only one that I actually pay attention to. Again, it's named
the Ag Futurist blog, and you can go to my website, toddthurman.me, and all the contact information there and links to the blog.
Till next time, thanks for being here. He's Todd Thurman. I'm Damian Mason. This is The Business of Agriculture. Well, that concludes another fantastic episode of The Business of Agriculture. This episode was brought to you by Pattern Ag. Everybody in agriculture understands the importance of soil health. We also keep an eye on our soil better than we ever did through advanced soil testing. But what if there was a company that provided predictive analytics, not just checking out nutrients and all the elements that are in there, but also could tell you the degree of risk you face with disease and pest pressure? That's right, Pattern Ag can do that. They actually can tell you, hey, you're going to have a real issue here. You can proactively treat for corn rootworm or cyst nematode or sudden death syndrome before the problem actually starts costing you yield. Go to pattern.ag, that's www.pattern.ag, to find the nearest rep that can help you start doing better for your soil.